This is the PKF Texas Entrepreneurs Playbook. I'm Jen Lemansky, and I'm back with Ryan Istre, an audit director and a member of the PKF Texas SEC team. Ryan, welcome back to the Playbook.
Thanks for having me, Jen.
So I've heard that the SEC has made some amendments about the definition of a smaller reporting company. What do these companies need to know?
So the SEC is in process of expanding the definition of what a smaller reporting company is.
Okay.
The way a public company determines whether it's a smaller reporting company is at June 30th of each year, it has to calculate its public float. So a public float means how many common shares does the company have outstanding, multiplied by the trading price of the shares on that day.
Okay.
Historically, $75 million was the cutoff, so if a company's public float was less than $75 million, it was considered a smaller reporting company. So the changes that the SEC has made is increased the amount of public float to $250 million. So a lot more companies are going to fall under the definition of a small reporting company.
So if they're not actively traded, what if there's no public float? How do they determine that?
That's a good question. The SEC has also included in the definition of a smaller company, a small reporting company with no public float, annual revenues less than $100 million.
Okay. Are there any benefits to this to smaller reporting companies?
Definitely. In normal public company filings for accelerated filers, you have to include 3 years of historical financial statements,
Okay.
2 years of balance sheets, 3 years of income statements. In small reporting company rules, you only have to include 2 years of historical income statements.
Okay.
And that doesn't sound like a lot that they're dropping off from the requirements. However, in each of the financial statement footnotes and all of the sections of the MD&A, for example, anything in the 10K, because of the amount of disclosures necessary for public companies, dropping off an entire year is
That's
actually
huge.
definitely, it's a big help. The SEC staff actually assumed that about 960 filers will be able to benefit from these expanded rules of small reporting companies.
That's great. Well, we'll get you back to talk about it a little bit more.
Sure.
Thank you. For more about this topic, visit pkftexas.com/SEC desk. This has been another Thought Leader production brought to you by PKF Texas, the Entrepreneurs Playbook. Tune in next week for another chapter.